This is a series of videos I've created that'll hopefully take away some of the mystery around accounting. Accounting is the language of business, and I want to help you to start to speak the language of business. Understanding this will give you a true advantage in your small business. If you've clicked onto this video, you've already awoken to another level of consciousness in the business world. You are on your way to becoming a high performer. High performers in all disciplines, not just business, but like music and fitness, auto repair, they know the lingo. They know the basics. High performers immerse themselves in the knowledge around the subject matter they are interested in. They prime their minds. This makes them more successful. So you're here, which tells me you're curious and you want to learn more so you can be successful in your business. Okay, I'll help you. Make sure you subscribe and hit that notification bell so you can keep getting these little lessons. These lessons will bring awareness to a subject which obviously has a lot of depth, but it will expose you and help you to start the learning process. So, lesson 1 I call T-accounts. T-accounts are tools which help practitioners visualize the fundamental basis of our accounting system of accounting, which is called double entry accounting. It might sound fancy, but all I mean here is this. Whenever an event, for example, like a transaction with the public or even the movement of materials throughout a manufacturing process, whenever something like this occurs in a business, there's an action and a reaction. And the action and reaction are equal. There's two sides to the event that balance each other out. So if I pay out cash, I receive in return either a service, a good, some supplies, equipment, or furniture, presumably at equal value to the cash I paid out. If I receive cash, I've had to give something up, like a good I own, or my time as a service provider, or promise to deliver on service in the future. Make a little game out of things that happen in your business by thinking about all the reactions that occur as a result of the day-to-day actions that happen in your business. So if I'm a butter manufacturer, I would very simplistically follow this train of thought. I need cow milk to get the whole thing started. So I'll go out to the countryside with my checkbook and find some dairy farmers that have milk to sell. I will pay or give up cash to the farmer for what I consider a fair price, and in return, I will receive a pail of milk that I will call raw material inventory. Now, I need to find some helpers that will churn the milk for me while I'm busy trying to run the business. So I will pay someone to do this for me. As a result, I will in return receive their time, which we call wages. This also creates an obligation to the federal government to remit the appropriate payroll withholdings on their paychecks. Now, when my employee goes to do their work, they will need to use some of the raw material to further process it or churn it. So they will take the raw milk from raw materials inventory, do their churning, which converts the raw material into finished product. So there's an event here too. We've given up raw material and received back finished product. Okay, now the finished product is available to the public, after it's packaged and stuff. So now when I sell the finished product to the public, I'm giving up my finished product and receiving cash. And then the whole cycle continues. And if things go well, you continue this game by introducing machinery into the mix. So this very simple example is meant to illustrate the two sides of every transaction or event that happens within a business. It's called double entry accounting. There's always two sides and they equal, or like accountants like to say, balance. There can be multiple elements on each side of an event or a transaction, but the sum of these elements will always balance with the other side. So for example, let's say a wholesaler wants to buy a large order of my butter. They are willing to put 25% down on the order right away, but they would like 30 days of credit for the other 75% of the order. So if I agree to the terms of this order, here's everything that's happened. A, I've received 25% of the cash. B, I've received a promise to receive the balance in 30 days or an accounts receivable. C, I've incurred a cost for the finished goods I have in inventory that I have to give up. D, I've taken the finished goods out of inventory. E, I've given those finished goods to the customer in exchange for consideration or revenue. So how does this balance out? I want you to imagine two sides of the transaction, or if you want to sound accountant-like, draw what we call a T account, which looks like this. We receive cash. a promise for cash or accounts receivable. We've incurred a cost for the finished goods we've had to give up, and for all of this, we get revenue from the customer, and both sides balance out. Let's use numbers in this case. The order for my butter is a $1,000 order for 400 pounds of my butter. It costs me $1 a pound for my butter to produce, or $400. So I receive $250 right away off the bat in cash. I receive the promise of payment of $750 in 30 days, or accounts receivable. I've incurred a cost of $400 because I'm giving up inventory or finished goods that I have on hand worth $400, and the total value of the same is worth $1,000 in revenue. You see how it balances? Now this is simple, but I don't care how complex something may seem to sound. When you break it down, every single transaction in the history of transactions has a T account that resembles this. Most transactions have very few numbers on both sides, but some have lots of numbers on both sides. But every single one of them balance out. It's a yin and a yang thing. It's like bread is to butter. And not to get too philosophical here, but you will see this everywhere in nature too. Although most of it is not documented, you can imagine this little T account everywhere. When a honeybee pollinates a flower and produces honey, when a star collapses and gives life to a new galaxy, T accounts are everywhere, and you can start to practice by thinking about the two sides of all these things. It's actually a lot of fun and can actually put you in awe to the wondrous balance of the universe. And who said accountants are boring? So next time, let's take this notion of balance and explore its place in the basic accounting equation, which is assets equals liabilities plus net worth. See you next time, and remember, I do these videos because I love small business owners. I truly do. But I'm also the managing partner in a firm called Swain CPA, and we are accepting new clients with a vengeance. Our purpose is to inspire small business owners and, frankly, helping them fulfill their wildest dreams. You might think I'm being cheeky here, but book one call with me and you will see how serious I am about that purpose. Until next time, find balance, my friends.